Alright, so basically, guys, I'm doing another video because that other one was shit. So like, yeah, let me just this is one of my setups for tomorrow or like whenever it hits. And this I'm just waiting. See which other setup do I have here? Oh no, not yet. I think here. Yeah, I have a setup here. See what happens. But I'm gonna show you guys the thing I sent to the chat. All right. So I'm gonna show you what I did exactly. All right. Okay, so what I did first. Fuck. Wait. Let me just remove all drawings. This might be a long video. All right. So we're in the monthly. We just come here and check for like equal highs. This is an equal high right here. That's fine. Okay. Let's put equal highs. All right. So the way we trade, or the way I'm starting to trade, is liquidity and like institutional. Basically, what that is like banks and institutions and people with like a lot of money. So the people that have a lot of money, like the banks, institutions, they control they control the market. So like when you're trading support resistance and like trend line and like Fibonacci and all that, the banks already know like that that a lot of people are using that, so they're gonna use that to their advantage and try to fuck people up. All right. So yeah, that's basically what I'm doing. I'm basically going against the retail traders because I'm turning into an institutional trader. Basically, it's just a way of trading. Like, there's nothing wrong with support and resistance. It works. It's just this is more. I feel like this is like I understand. I see the market better like this. All right, so we go to the weekly. Um, we see here some equal lows. Let me just make this more accurate on a level. Okay, so we'll label this equal low. Okay, all right. So here we're just looking what the market wants to do. The market's probably gonna want to. It's gonna have to get liquidity from uh when it like from down here or up here. It has to, like, because the market moves from liquidity to liquidity. That's basically how the market moves. And if you guys don't believe me, just go back and check like previous. It moves like that. All right, so here we're in the daily. Nothing to see. Hour 4. We're just looking and look another um equal low. So basically, equal lows is just like they're in the same level. They're equal. All right. So we see the market. It has done a buy and sell system basically, and right now what the market just did right here is basically it filled up all these imbalances, and like imbalances are like um places where like the market hasn't touched, like hasn't retested. So like for example, let's see right here and right here, basically not like this, right there, from that wick to that wick, and then from here to here. See, the market's filling it up because it always has to fill up these imbalances. Not always, but most of the time. All right, and we also see up here is some equal equal highs. No, no delete. No. Okay. All right, so we see that, right? All right, now let's reverse it a little bit. Let's go to the 1 hour and let's do that. Let's go back in time to right here. Let's say right there. All right. All right. So the market right here is basically, in my eyes, it's kind of consolidating basically, but right here we just ended in a downtrend. Now we're going up, and now it looks like we're going low. All right. So see, remember how I said the market has to catch liquidity somewhere, but it can also catch liquidity like in the lower time frames too, because it moves in liquidity. Okay, so right here, we'll do it again. Equal, yeah, right here. Equal highs. Let's do it. All right. And what we have down here is an order block. Basically, like it's what the name is. It blocked the order got blocked because this thing look people would have thought this was going down, right? But then this bullish candle blocked it and went up. That's how I see it. Okay. All right. So hold on this a little bit. Okay. So what I see here is basically all this imbalance, like all of this imbalance, 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 imbalance. And right here, what I see up here is liquidity. Basically, liquidity is wait, I don't know if I said it, but let me just repeat it. It's like where the sell where the sell orders are, and like where stop losses are, or buy stops, and vice versa, like the other way where the stop losses and sell stops are. So in an institutional like point of view, the markets right now, they're like, I mean, the banks right now, like all people with the big money, they know that this is going to be like a trap. They're trapping all the retail. They're going to trap all the retail traders into selling in this area because it's a resistance area. Okay, guess kind of understanding. All right. So what I see here is I see here an order block. So most likely here it will react and most possibly break through this, retest, and then go up. That's what I was seeing when I was first seeing the trade. Or what else could have done is it could have break through this, came here, grabbed some liquidity, and then skyrocketed up. That's what I could have done. All right. Can I? How do I? Okay. All right. So let's put this back just to show you guys. Okay. So this is what you guys would do, right? Like the retail traders, they would put here as resistance, and they'd be like, all right. So whatever happens here, if it breaks, I'm gonna buy. If it sells, if it holds, I'm gonna sell. All right. So let's play. Okay. It rejected this. Wait, let me fix this right there. So it kind of wicked the order block, but it didn't it didn't fill it. All right, so now it's going up. Now it's going up. Now it's going down. Oh, look, it rejected the rejection zone, right? So people are now looking at it. Is it gonna break or is it gonna respect it and go down, right? All right. So they see this. They see that wick. Hold on, let me make sure I'm recording. I am. All right. So right here, they're gonna be like, oh wow. If you go to the lower time frame, they're gonna be like, oh wow, this thing is going down, right? That this has formed like a little trend, you know. So most people like most of the people that trade are retail traders. So are gonna be like there's gonna be a lot of sellers in that area. So when they sell, the banks are gonna see that everyone's getting trapped, and it's creating more liquidity down here too. Watch, it's gonna catch all that liquidity and then skyrocket because you guys gotta take in mind there are like millions of traders that trade retail. So there's a lot of sellers there, right? All right, so let's check. Watch, it's going down. So people right now, it caught this low. You see, I think it skyrockets from here. Yeah, see. So if you sold right here, you just got stopped out, and the market caught all this liquidity from all the sells, from all the buy stops, and the stop losses. You see. So you guys would have lost here, and the banks went up. All right. So let's keep going. Let's check it around. Right now, I'm just looking at the market, what it's doing. It's retesting this zone, this equal high zone. So right now, what I'm thinking is, since it already got liquidity right here, what I was thinking is it was gonna go try to retest this order block and then skyrocket again and go up there. Or it could have just gone all the way down here and then skyrocketed. Or it could have just there's so many possibilities that could have happened. But you gotta see what the price is doing. So could have gone through here and then retested this and gone back down. All right. All right. So right now what I'm doing is basically just seeing what price is doing. Okay, that's a big bullish. I mean, that's a big bearish push. Now people are like, oh my god, this thing is going down because that bearish engulfing there. Oh my god, let's get in sells again. Let's get in sells. I don't want to miss out. They don't want to like FOMO's getting to them. All right, so then boom. If they entered because of FOMO, look, they would have got stopped out, and boom, look, it caught more liquidity. You see how here there's like a lot right here. There's probably a lot of sellers and stop losses up here. So look, it caught liquidity again. Telling you, it moves through liquidity, and it just keeps doing that. Watch, watch, watch. There were sellers right here. Watch, sellers right here. Watch. Boom, it took him out, and it just keeps moving up. All right. So let's see, where did I enter? I think I entered. Okay, so this was my entry was right here. I think right here, basically right there, and I think I'm targeting this. All right, all right, all right. So now, why did I target here? So okay, so up here, what we can see is another hold up, is another order block. Okay, doesn't have to get hit right away. It can just go down and then hit it again. Because look, it's it created more liquidity. Look, and more liquidity to catch. So what I'm thinking is it's gonna go boom and then boom and then come all the way back, drop back down. Or it could go all the way up, go break these equal highs, catch some more liquidity right here and then drop. All right. But anything can happen. That's what you gotta see. And right here, the reason it's going up it's because there's a lot of um imbalances in the market. So see how it's grabbing all the imbalances. I'm not really drawing it like exactly where the imbalances are, like just an estimate. I'm just showing you guys. So it's catching all that. All right. And here, I took this trade. Hold on, let me just delete this. Because if you guys see here, there's an area of the area of like a key institutional level, 0.778. So I put my entry there, and I think I went to a lower time frame. Let me make sure. I think I just put it there because let me see. Yeah. So look, look at this, beautiful. There's an order block, and it hasn't been touched. It hasn't been respected yet. So we keep going. Let's bring it across. Uh, Oh yeah, and also what we do to get an entry is like put it in the middle, like the middle of the order block, because it most likely fills up half of that. So you just use your Fibonacci, measure it, and put it in the middle. Okay. So I put it here. It could fill up or just touch and go down. It depends how much you want to risk. All right. So market right here. Well, what I was thinking here is this shit's I missed out. I missed out. So I was kind of thinking of it as a retail trader. So I almost got in like I almost got in. Hold on, did I fix this right? Okay, let me move this down. All right. So I was about to sell right here, but then I decided to just hold, and it started. Look, gotta wait, and boom, look, it hit our 778 zone. I mean line, and our order block. That's why I put my thing there. I just put it here because I didn't want to miss out, but yeah. And then I think I put 10 pips, my stop loss, like above this order block. Yeah, and there, and then it just fuck. Okay, and then it just Dropped. It just dropped massively. And right now I think it's retesting all these imbalances. Let's check. Now it's just going up. So then, yeah, I took my 20 pips and I was out, and then I put my other entries into break even, and just gonna let it run. And that's where we are right now, right there. Look here again, it's catching liquidity again. Look, people might have sold right here. Look at this, caught all the liquidity again. It might, to be honest, it might come check, retest this order block and then drop again, but who knows? Just gotta wait and see. So yeah, guys, that's basically what I did. And right now, what I have for my other trades is basically the same thing, but you know, different different pairs. Look at this trade, 18 pips. Which one's the one that I was doing? I think this one. Yeah, look, this one. If I get this trade, it's gonna be a 1 8, 6 pips drawdown and good profit. I can make more videos showing you guys like how like liquidity works and shit. But it's not that hard, guys. We got this.